Hello traders, welcome to another weekly gold XAUUSD price prediction and analysis video. So in last week trading session, especially in case of Thursday trading session, we have seen that European Central Bank, that is ECB, surprisingly raised its key interest rate by 25 basis points to 4.50%. But at the same time, they signal that this is likely to be the last interest rate hike in the fight against high inflation. So this means that the central bank officially expects stagflation in Eurozone at least until the end of 2025. Although after this announcement, after interest rate hike decision by ECB, we have seen a good sharp decline in gold, but after testing the low near 1900, gold price quickly recovered and we have seen a good bullish move in Friday trading session. This is all happening because you know that longer term stagflation is probably the most bullish scenario there can be for gold. Also, you know that in next week the Federal Reserve Bank is still expected to leave its key interest rate change unchanged. So next week is going to be very interesting because we can see a good mix of fundamental and technicals also. So in this video we are going to discuss important price action levels on different time frame and different price structure that currently gold is following, so that we can utilize those levels in upcoming week. So as usually we will start with the latest COT report, and if we look at the change in positions of the managed money, so you know that we generally look at the positions of managed money because they are the smart player. So this week if we look at the change in position, you can see, as you know, that this COT report data is from the Tuesday trading session. So at if we look at the change in position, this time they recovered, or you can say they covered, or you can say they closed their net long positions and they added in their short position. So this directly mean that they are pulling from the long and they are putting money in the short. So this is a bearish sentiment as per the COT report, and we already seen a good decline. This is the Tuesday trading session right over here, you can see. So after Tuesday trading session, after this high near 1923 or 25, we have seen a good decline. So we have already seen the impact because you know that the COT data is a lagging type of data because we already seen the move. But in longer term, if we check the scenario, if we check the positions of managed money, this can be helpful. So if we look at overall period of 6 months of the managed money, if we look at their position, and this is the 6-month range from here to here, and if we check the highest long position, it is over here and the lower right over here. So current long position is here, so it is still into the range. Also in case of short positions, this is the net short position, this is the highest level, and this right over here is the lowest level. So short position is also at in the range. So overall the trend in terms of COT is in range, and there is no clear indication because to see a good move we have to see a breakout either in the upside right over here, or we have to see the positions of the swords. So overall the scenario in the current week is in favor of bears because we have seen a good decline, but in Friday trading session we have seen a good recovery. So we are going to discuss the important chart first. So the chart that I want to discuss is this over here. So this is the daily chart, and this is the most important chart currently that I want to discuss. I already shared this chart in Telegram channel. So as you can see, after this high, if we check after this high and if we apply the Fibonacci from here to here, means for this cycle from 2008 to this low around 1893, as you can see, this was the low, and after this we have seen a retracement like this, but gold price failed to break above this golden zone. The golden zone, the range from the 0.5, that is 50% retracement, was 1987, but gold price failed, or you can say that gold bulls failed to break above this golden zone, and we have seen a rejection. So this was the scenario, and gold, after testing this high, we have seen another leg down toward this low around 1885. Again, after this low, as you can see if we zoom in, so again after this low, when price tried to recover back in previous month, we have seen that they tried to break above to 0.61. This is the bullish, sorry, this is the main zone that we have to watch for. This is the golden Fibonacci zone, and after testing this 2 time, as you can say, this you can see, we already discussed this chart in Telegram channel, because after testing this we have seen a good rejection, and we have seen another decline, and in Friday trading session we have seen another pullback. So what are the level that we have to watch for next move? So if we draw the Fibonacci from this high to this high, mean for this cycle, from this high, the cycle around 1953 roughly, and the low if we consider 1901. So if we draw Fibonacci from this high to this low, this is the golden zone, you can see. And in yesterday trading session, after this good bullish move, we have seen that gold price or gold bulls faced resistance over this. As you can see, the price closed under, or you can say below, to this golden zone. So in the higher price side, this is the most critical level that we have to watch, the level 1933.22 on Fibonacci level. So if for bulls, if the price or if the candle, daily candle close, then we can expect further rise like this. So we can expect that bulls might take over. Okay, but if price not able to break above 1933, then better we have to look for sell opportunities, because we already seen this type of movement in previous cases. So for intraday and for longer period, we have to watch this level very carefully. Just a second please. So for next week, this is the main zone that we have to watch for. We have to watch how price reacting. If candle not able to close above this zone and this level 1933, then we can look for the sell. But if price close above this, we can look for the buy opportunities. Okay, so this is the case in case of Fibonacci levels, and this is the most important level. Also, if we check the pivot placement in case of daily chart or daily candle in case of monthly period, so for this current month, as you can see, we just have to keep the chart simple. Okay, we do not have to put too many indicator, too many moving average, just keep it simple and you will get the results. So as you can see, in case of daily pivot placement, this is the daily chart, and if we check it, you can see this is the pivot level in case of daily, that means for a month range. So the most critical level is 1930.25 in case of daily range. As you can see, we have already seen rejection to this level previously also, and in yesterday trading session we already seen rejection. So 1930.25 is a good level we have to watch. And also, as you can see, in case of monthly range, currently price is under the pivot level. This is the pivot level, so under this we better look for the sell. But if price break above this, then we can expect a bullish move. from the gold in case of daily range. So this is the level 1930 in case of daily chart. Also, if we discuss other charts, let me show you. Also, this is the important chart. We already discussed this chart. This is the dollar chart. As you can see, currently the chart is facing resistance near to this range, but overall you can see the daily is a indecisive, or it kind of a dozy, as you can see. But this is the level there, this is the zone that we have to watch carefully in case of DXY. So if price able to break, then this is not good for gold bulls. And if we see some retracement, then we can look for buy opportunities on gold. We already discussed this chart in previous prediction video also. And other chart that we can look for is this one, the US 10Y chart, US government bond 10-year. So as you can see, this is currently facing resistance and it is currently testing this neckline. This is also daily chart, as you can see. Previously we have seen rejection over here, but this is seems like that it is testing it many times. So if they break out from here, this is directly going to put pressure on gold bulls and we can expect decline on gold. But if they failed to break above from here, then this might take some retracement and that can call the gold bulls. So this is the chart that we have to watch carefully. And if we check the intraday level chart, that is the 30-minute chart for gold, this is the scenario. As you can see, so on the chart, as you can see in yesterday trading session, we have seen rejection over to this this price level. So this is the immediate resistance, and in the bottom side, after the breakout of 1915, we have seen a good bullish move. So on the bottom side, 1915 is our important price support zone, and below that 19018 is our support level, and also the week low is also our main support level. So above this we can look for buy, under this we better look for sell, and we have to wait how price going to react over to these level. Also, if we check the next day placement of CPR, let me show you. Right over here. So next day CPR or the pivot level is above to, it is in ascending order. So above to CPR, like the bottom part of the CPR is at 1920. So above this we can look for buy, but if price breakdown, then we can look for sell in case of intraday time frame. Also, if we check the open interest of gold future chart, this is the open interest right over here. And if we check the summary of the open interest of the gold future, and the PCR ratio is still bearish. As you can see, this is the nearest expiry, 11 day to expire, and this is 0.75, and this is not good for gold bulls. So the scenario in the case of open interest, it is in favor of bears. So for bulls, the major level that we have to watch is the Friday high. If they break out, then we can look for buy, otherwise we have to look for the sell. Also, the most important economic data that we have to watch in next week is in Wednesday trading session, we have the most important data, that is the Fed interest rate decision, FOMC statement, also this one, Fed manufacturing index, that is on Thursday, initial jobless claim, existing home sales, and service PMI on Friday. So these are the data that we have to watch for in next trading week. So we are going to discuss more about these levels and these data in live trading session in Telegram channel. So see you there. Thank you.